Welcome to the Twomey Stock Market Report. I'm James Twomey, and today's Tuesday, 9/27/2022. It's about 10 of 9 Eastern Time, and I continue to get some inquiries. We did post yesterday, and how do you trade in a down market? So let's get right to it. The main question, how do you enter or exit a trade in a down market, since typically markets fall much faster and quicker than they rise? Okay, so what does that mean? Should we go short? Should we go long? And what are our entry points, and what happens if we're wrong? So we're going to cover that here today. This is a little bit more towards the reactive trader versus a trend trader. So keep that in mind when we go through our analysis. So here we are. Let's take a look at the short side of the S&P or the SPY. So we use the ETF SH. It's the short side of SPY. And if you look, the first thing I do is I look down below here in the stochastics, and we see that they're well above 75. The red and the green are kind of touching, but typically when the green is above the red, that's positive, shows the market is in a positive direction, positive influence on the current direction. Then I look up at the MACD, and the MACD is the green is above the red, showing and it's well positive, and it's on an upward trend, confirming the stochastic is a very short-term trade. It's a reactive, immediate type influence, the way I've got it set up on my trading desk. The MACD is a little bit longer term. And then I look at up here in the daily chart. I've got a couple of dark blue lines here. What are they? Those I call those the Twomey trend track lines. Even though it's a very short trend forming, I try to use that as my guardrails, if you will. So every time it seems to have gotten close to the bottom of it, it has rebounded upward. This is the short of the SPY. And then as it reached the upper limits, it retreated. So now I look at the last couple of days, what has happened. We've gotten up and broken through that trend track line. The market doesn't know about my trend track lines, so it's not going to automatically retreat. So that's telling us the market is extending itself. Will it continue? And should I take a short position? That's the question. So then I look at the relative strength index. It's up at 73. Overbought is 70. So that means the market is a little overbought for the short side. However, and I'm going to show you an example after this, the RSI in an extended trend becomes less of an indicator. So you need to put it in your hopper of other indicators on a technical trade desk, right? Because if you use it solely alone, it often will give you a false signal on extended trends. During the summer, when we had the volatility, it was moving up and down in a very orderly fashion. The RSI was almost a weekly predictor that we could say, hey, the market's going to rebound. But with that said, let's take a look at the long side on the SPY, and then we're going to come back to this, okay? So we want to round this up. We're looking at the long version versus going short. A couple of things stand out. I look again, stochastic, very low. They're down at 2.6 for the green, 4 on the red. This is a very quick indicator for me. It tells me the markets are really depressed as far as being in the oversold category. Once you get down below 10, my antenna goes up that we may have a change of direction. Then I look up MACD. MACD has not changed positive at all. The green is still below the red. The trend or slope is still downward, and it is in negative numbers, -9, confirming that the longer trend analysis, we're still heading downward, and it hasn't started to change yet. I look up at my daily chart. I look at the trend track line, the Twomey trend track line. Again, we've gone beyond it on the lower side. Every time it's kind of on this shorter trend from this high to this low. There's been a little bit of rebound. When it hits the line, when it goes above, it kind of retreats. However, just like the short side, we've now extended past, saying that there's downward pressure on the market, and it's going a little bit deeper than the trend. I look at the RSI and 27, so therefore it is definitely flashing oversold. But I'm going to touch upon that because over extended periods, especially in radically down markets, that can stay down at low levels for quite some time. We talked about in previous, I know this is a busy chart, but bear with me. Over here in this blue arrow, the supply line, back in the summer, right before we got the rally, there was a lot of buyers and sellers all around the same area, and that was the supply line. Anybody who bought there and enjoyed the rally and didn't get out are going to say, hey, I'm break even, I got to get out. Now they're below break even, and they're probably a little more panicky on the sell side. If people on the other side of the camp said, geez, I missed that rally, I was really convinced the market was coming back, I think, again, the pundits are telling me the market's oversold, I'm going to jump in and reduplicate that rally. And they may be right. So they may come back in. But what happened? We got to that supply line, we crashed right through it. We have not quite on the S&P, but the Dow has eclipsed this low that we had in June, and the S&P is just, the SPY here. It's flirting with it. It hasn't crashed below it. So that's why everybody, based on that, you're going to start hearing the market's oversold. The market's oversold. We're due for a bounce. So we probably are. And how far will that bounce go? Not sure. So now I'm going to go back to the short. So that gives you my, immediate thought on short or long. So now my bias is the trend is down. Whether I prove to be right or wrong, time will tell. Reactive trader, right? I've looked at, if you read my, go to TwomeyStocks.com. That's the number 2MEstocks.com. We have all the information, the free newsletter. I've got a trade tracker there. You could also sign up for alerts. But the net of it is, our bias is obviously in this bear market and recession, the market has been down. We're going to have elevated times, just like the summer bear market rally. How long and far they go, that becomes the reactive side. So right now I say to myself, since my bias is down, where do I get in? Well, I'm not sure I want to. I'm short. I've been short the market. I don't want to get in right here because it may be all the indicators saying I may have a pullback. We thought that yesterday, and it really didn't pull back, right? Whatever it did, it never really took a situation where we've got to pull back for a buy. So I say, where do I look? I look first at my 9 EMA. That's here in my daily chart. If I could click on it real quick, it's the dark black line, and it's not going to work, but there it is. So every time on this shorter trend in the Twomey trend track line, since this low in the short side, when it got down to the 9 EMA, it repelled and went up pretty much. So that is, and then I look at where that 9 EMA is now, 16.33. So my first buy is about a third of my position that I want to add is going to be around 16.35. The 14 EMA, I'm going to use that as my, let's say the market, if I'm wrong, and the market dramatically moves against my position, I'm going to put that first stop at somewhere right below my 14 EMA. Now, these are kind of quick indicators. So, as a reactive active trader, you may get in and out, but that's okay. You may have to do it a couple of times. And if we're wrong, we're out. And we can certainly, if we get a buy signal, go long, which I'll alert my subscribers via email real time, then we go long. But right now, I would put my stop right below that 14 EMA, which comes in at around 16.2. So let's say I put in at 16.3536 as my buy. I'm going to put 16 as my stop. And if you're a Fibonacci person, then I'm not an expert at Fibonacci as far as drawing the graphs. There's a lot of ins and outs on this, but around 16, it looks like the 0.382 retracement from the low to the recent high. So that would be another indicator of where you want your first stop, right? That's how we would trade this market. I want to, we talked a little bit of RSI, so hopefully that helps you if you haven't had a short position and you're convinced the market's going to go further, you want to get into it, great. Look at my videos, look at my market report. It'll give you some more in-depth analysis on that. But that's how I would trade real time in a down market. I want to quickly talk about the RSI, since it had been a good indicator for us, but I always warn people it's not a sole indicator. And here's a good example. I'm going to expand this. TBT, this is short to 20-year Treasury. This trend, since we've been long, every time it's come down and hit that lower trend line, it's bounced up. Same thing for the upper trend line, right? Now, the RSI right now is 68, 69, almost screaming overbought, right? Well, look here. The oversold 57, and then it bounced back. Down here, what was it at the low here? It was 53, and then bounced back, and so forth. We've got this one that was at 47, and it bounced back. It never got into that 30s range, which we put our antenna at, right? If you look down here at the stochastics, since this went long, it's been positive in above the 60, 70 range, pretty much right from the get-go, and it stayed there. Remember I said I look at the stochastic. It gives me a short-term indicator, the market pressure up or down. I look at the MACD. Same thing. It crossed the green, crossed red. It went into the positive territory, and it stayed up there. Yeah, it's getting a little flat and tired here, but it's still elevated, and the slope is upwards. These are quick synopsis on what I should do. It also helps me with my trades and stops, when I should add. For example, TBT, I've been adding all along as this upward trend. Every time it has gotten down around the 9 EMA or 14 EMA, I've added. And then when it's up here, I'm not adding, right? And I'm moving my stops up as I do to reflect if it does eventually break through these, the 14 EMA, which is this gold line, or my Twomey trend track line. So there you go. Hopefully that helps you in some reactive trading. And what you could do is go to the website, TwomeyStocks.com. That's the number 2, MEstocks.com. We've got our weekly video. We've got our free newsletter. You can view our trade table. It also includes some of the last several weeks of trades that we've had. We've enjoyed some great gains. We did play our sector table. A couple worked out pretty good, and we had a couple that, the last Friday did crash through our sell signal, and we've updated our subscribers with our trade alerts. But all the others are free. Go to that website. I'm James Twomey, and welcome to the Twomey Stock Market Report.